Let's take a look at some trading tips on this Thursday. This live trade setup, this rare opportunity for a quick answer on a 4-hour trade for both ETH and BTC. This video, more so than any other, is not intended as investment advice and is for educational purposes only. So we have a few things going on here for BTC and ETH, probably other charts as well. You can apply this logic to other charts on any time frame you want. Keep in mind the higher time frame is always better. I'm using the 2061 2030 settings on the cloud. This is the cloud here in case you are unfamiliar. These are the TK lines, Tenkin Kijun. How this works is if price is above the cloud, we're bullish. If it's below, we are bearish. And the TK lines help show you the strength of that trend. So on the 4-hour for BTC and ETH, the TK cross has been bearish in that the Kijun has been above the Tenkin. The slower moving average has been above the faster moving average. When that crosses, in this case it already has on BTC and is about to on ETH, when that crosses, that is a signal that the short trade or bear trend has come to an end in the interim. And you get this golden opportunity window for a decision on a reversal or continuation trade. So that's the cloud picture for both of these. On top of that, there's a potential for a bullish reversal pattern known as the inverted head and shoulders. And we can argue about this all you want, but for me, it's good enough to represent an inverted head and shoulders in both cases with a descending volume profile. Again, arguably good enough, right? I'm not looking for textbook perfection on every trade I take. For this setup, we also have the potential for an edge-to-edge move, in this case in BTC, from 38.8 to 45. In ETH, it's much smaller because the cloud is not as thick. ETH basically pulled up too quick for this cloud to sort of mature, whereas BTC sort of languished sideways. But anyway, the edge-to-edge move for ETH is 2750 to 3100, let's say. So this gives you a good flavor of the variety in the edge-to-edge moves. Ideally, we're always looking at these because there's a larger setup here. So your entry for both of these will be a candle close inside of the cloud. Close, candle close, people. Close. Okay, that's very important. That is the trigger. Okay, with, again, a bullish TK cross. Also important. I see a lot of people talking about setups that don't look like this, and that's fine. You can enter trades whenever you want, okay? Like, you don't need me to tell you. If you think this is bullish, go for it, you know? Pedal to the metal. For me, I'm looking for back-tested setups that give me some sort of bias or edge towards direction, okay? So having both together is really best case scenario because you're having targets feed on themselves, stop loss zones feed on themselves, and entries feed on themselves. For these edge-to-edge moves, you want, again, that entry of the candle inside the cloud with a stop loss below the Kijun or the lower low. If we're bullish, we're not going to be making lower lows. If we're making lower lows, this is going to retest 30.31. It's going to retest sub 2K, in ETH's case, probably 1850. Anytime you get a potential reversal and that fails, almost always it represents trend continuation. In this case, bearish for both. So keep that in mind. Entry will be candle close in the cloud with a neckline breach. In this case, both will be, it'll be together, right? You'll see the confluence there on both, most likely. Stop losses will be around 36.5 for BTC, 2600 for ETH. And then your targets for both get a little more murky because for BTC's case, there's a high probability that we reach 45 if this edge-to-edge triggers, if this neckline is broken. For BTC, the inverted head and shoulders, some arbitrary, if it's diagonal, you have to sort of pick a midline, basically, and then bring this down to either the wick or the candle. That's up to you. But this gives you a fib extension with a measured move between 47 and 50. So one way to trade this would be to layer your asks at 45 to 50, adjusting those accordingly should we start to look weak, should we start to see bearish divergences, stuff like that. For ETH's case, I wouldn't start layering the asks until 34 plus because the risk reward on the entries here based on the edge-to-edge move are tiny, right? So in ETH's case, because it's already pulled up so much, the expectation is certainly further continuation than just 3K, 3,100. When we get these edge-to-edge opportunities on high timeframes, you almost always see some sort of chart pattern along with it. So there's almost always confluence on any of these reversal trades, whether it's Adam and Eve, ascending triangle, inverted head and shoulders. There's always something. There's always something. And that's not just me looking for stuff, right? Of course this is a mess. Of course the volume's a mess. But it helps give me confidence that this is going to work out how I think it's going to work out. Something else to consider for targets is, what does high time frame resistance look like? Well, on BTC, there's a yearly pivot at 48, cloud or 47. There's a year cloud is at 48, yearly pivot's at 47. The previous range was basically at 48 as far as support resist levels. So do I really think we're going to make it past 48 and hit 50? At this current point in time, no, I don't. We're probably going to need to reconsolidate at 47 and then have a go at 50. That's possible, but I'm not going to just assume we're going to hit 50 based on this measured move when I'm looking at this high time frame resistance here, okay? For ETH's case, there's resistance at the daily Kijun, there's resistance at the R1 and the R2 monthly pivot. The daily Kijun and R1 monthly pivot basically match the 4-hour cloud levels at 31K. So you're getting a confluence of resistance there. And if we break 31, I fully expect us to hit 34 because that's the next monthly pivot up. Going into next week, we will probably see a bearish TK cross on ETH, which will be a long-term closure long signal. Just as it was for BTC here on the daily. Since October, this was bullish, dipped into the cloud. Eventually, we went above the Kijun, but did get a bearish TK cross that preceded all of this, okay? So even with this setup, it's hard to be bullish midterm until this can figure itself out, the TK cross, because we're setting ourselves up for bearish continuation into June. So we can do a bunch of stuff before then, but if we've got a bearish TK cross and we start drifting below the cloud going into June, we're going to probably revisit the lows, okay? That is a long time coming. It's an if this then that decision tree. That's one option, okay? But it's always in my head. What's next? What's next? What's next? If we look at previous examples of these edge-to-edge moves with chart patterns, 2018, 2019 on ETH, ascending triangle on the daily, starts as a W, we get another higher low at some horizontal, even retest that, and then you get continuation. BTC, same thing. This took a month to play out. This was an edge-to-edge trade that took a month to play out, basically reached its target and then some in a single day on a quarterly rollover. So even though this is on the 4-hour, these setups, you just have to be patient. Your stop loss will be the bottom of this cloud once this triggers. Once we're in the cloud, once the Kijun's in the cloud. Because even here, we breached the Kijun on close, but once we were in the cloud, we were in the cloud. So keep that in mind as far as stop losses. Another example, this was 2019 into January 2020. We had this inverted head and shoulders that broke up. Then we had an ascending triangle that broke up. Then we had a falling wedge that broke up. So if I'm trying to think about what's possible here going into 48K for BTC, this is what I'd want to see. I'd want to see it reach sort of the earlier resistances at 47 and reconsolidate in a bullish way, and then potentially reach that 50K target, but certainly not an immediate expectation. But this is what you'd be looking for. Just continual evidence that there's some sort of bias going on here. Here's another example. BTC in 2018, inverted head and shoulders, leading into this bullish TK cross with the edge-to-edge move that kind of petered out. It didn't quite reach its target for the edge-to-edge move, but did reach its 1618 and measured move for the chart pattern. So hopefully this was helpful. I know people, for some reason, always want to see live trading. This is about as live trading as I can get. I will be taking these trades on the ETH-BTC fund that I trade for Techemy Capital on enzyme.finance, non-custodial portfolio management tool. You can see everything that I'm doing here, AUM, allocations, deposits, withdrawals, trades. If you want to participate, you can send ETH or USDC into the smart contract where it gives me the ability to trade those funds, much like copy trading. And we also have a DeFi portfolio that has gotten hammered over the past month thanks to all the downward volatility in DeFi assets. But this one is 15 to 20 blue chip DeFi coins. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.